This week, the economic freedom fighters called for a debate in Parliament about the nationalisation of South Africa's banks. It says there are no banks in South Africa that have meaningful ownership by black people. The Banking Association says that call is alarming. Economist Sia Beniza joins us now to take a look at that issue. Thank you so much, Sia, for your time today. What's your view on the nationalisation of banks?
Well, this also speaks critically, I think, and puts the question right at the centre in terms of the socioeconomic impact of the banking sector in South Africa. Quite recently also we've seen a lot of stories come out, such as the Bancorp story out of PESA and the collusion case against the banking sector, where they colluded against the rand. So it puts to question, where is the sort of commitment of the banking sector and what is its socioeconomic impact on the economy?
Okay, but do you think we need to nationalise banks?
Well, that's the tough question. I don't think that in its current form we should be approaching nationalisation question the way it is, but we definitely need to have a much more concerted and radical approach towards dealing with inequality and poverty. And I think, the statistics that were brought out in the parliamentary discussion are quite evident. I mean, we can't blame the international economic state currently as the global economy is recovering. So the issues in the South African economy that are slowing growth are domestic, partly at demand as a result of unequal distribution of income, but also as a result of political and policy uncertainty. Okay. And so what I would like to see is policy that creates incentives for private sector to invest a lot of the surplus capital that's sitting on the JSA, sitting in financial assets, to create more real assets and productive assets that create employment.
What about establishing a state-owned bank in parallel to the commercial banks, actually, that are in existence already?
Look, one might argue that's a good way for the state to actually gain an experience in running banking and involvement in the banking sector. And certainly there are some talks linked to the distribution of social welfare grants through the post-bank system and the Itala Foundation. However, I think this doesn't really speak to the core of the problem that, we're sitting with the JSE that's 300% capitalized. We're sitting with the banking sector, which is about more than 100% of GDP in terms of sitting assets, whether financially, applied or, committed assets or not. These assets aren't necessarily all productive assets that create jobs.
Okay.
And so what I'd like to see is perhaps incentive for tax for dormant, capital that says if you have a certain amount of capital just sitting or in financial assets, we incentivize you to invest that, create seed funding, promote entrepreneurship and create jobs.
Okay, so would that possibly then require, let's say, an instruction to the Reserve Bank to possibly ring fence some money aside and say to the banks, look, if you're sitting on this much, possibly let's ring fence that and plow it back into entrepreneurship?
Well, it's definitely a multi-stakeholder approach. It would involve the banking sector. It would also involve the National Treasury as a central sort of tax legislative authority in the country, but also the DTI as well as, the Reserve Bank in order to administer the incentives. So something like saying if you're sitting with, say, 50 billion rand that's, not earning a certain percentage in terms of financial returns, we incentivize you, to invest in fixed or real assets with the proviso that you can get a certain proportion in tax cuts and other types of incentives.
Okay. Globally, the argument for nationalisation was what we saw happen after the global financial crisis about 10 years ago. And people saying that we actually can't leave the banking system, such as a crucial cog in the wheel, to the vagaries of the market.
Yes, so I think the 2008 global crisis was definitely a break, and evident that the market on its own cannot function, efficiently. Or it functions efficiently, but cannot redistribute equitably. And I think the story of saying, the banking sector should be left to its own regard in terms of, the invisible hand of the market, I don't think is a prudent approach. We definitely need to regulate the banking sector. But, as to whether we can nationalize and put all the banking sector in control of the state, I'm not sure, firstly, that the state has the capacity, and also the confidence that this would generate. A lot of the SOEs have come up with scandals in terms of public procurement, in terms of public financial mismanagement. And so what this does in the banking sector, because it's a financial sector, a lot of it depends on confidence, is that there wouldn't be a confidence in the economy, and it would be something like, for example, the Zimbabwean bond currency, which failed to pick up as a result of lack of confidence in that the government can actually guarantee the value of the bond currency and that there was domestic production that could match that.
So we could see systemic collapse if we go with full-scale nationalisation.
Well, yes, definitely in terms of confidence, but also the approach currently being taken that nationalise without, compensation would definitely have ramifications in terms of our international owners in the banking sector, which are quite significant players. So that would have a cost, but also in terms of confidence, it could lead to poor performance, and the whole system could fail, definitely.